Luca, seasoned consultant, worked with him various places. So yeah, long time ago. But yeah, so he's going to give a kind of comparison between cloud and premises, just an overview, and really over to Tim, really. Okay.
Thanks very much, Tim. Good afternoon to everyone. It's very good to see a lot of familiar faces here today. My name is Luca Scarpa. For who of you have don't know me, I'm an EPM, Oracle EPM expert. I've been implementing EPM system for the last 15 years. I've got an accounting background. I've held finance roles for a large corporation in the past. So I've been on the other side of the fence as well. I worked in finance. I've experienced the challenges of finance departments. I learned a lot during that time, and then I brought my experience into consulting as well later on. And I've held various roles in consulting companies in UK. I'm just going to move to the next slide here. And also worked more recently for Oracle for a couple of years, mainly focusing on cloud products. So I'm kind of forgetting what HFM is, to be honest with you. But every now and then I get asked some questions, so I have to refresh my memory. Yeah, I've got nearly 20 years of experience in group consolidation and reporting, but also group planning and analysis. So I work both on HFM consolidation system, but also planning and budgeting. I'm well aware that I'm not making my life easier today here, discussing the differences, but what I want to concentrate is also similarities between HFM and FCCS. So I'll be referring to the cloud product still to FCCS, although Andrea earlier on this morning explained that the naming have changed. So we're now referring to FCCS as consolidation, financial consolidation and close. But I'm still going to be using FCCS acronym or FCC. What I want to cover today is these main areas. So we're going to be looking at the high-level differences between these two products. And in particular, dimensionality and rules, where the majority of the difference are. But also be looking at where the similarities are. So there are products in there which have been there for a long time, and they've been embedded in the license. So we're going to be looking at, for people who do not have any experience on both, will be quite beneficial to go through this. Just before I start, who has worked on HFM here? Pretty much everyone? No, actually. And what about FCCS? Yeah, lower number, as expected. And who has not worked on any of those? Okay, we got some. Very good. So, as Andreas explained this morning, FCCS, is an evolution of a product that Hyperion has built over the years, and then Oracle has taken over. So we've got 30 years of experience embedded in the product. But we're also looking at 30 years ago, right? And actually HFM was first released probably around 15, 16 years ago. So if you think about it, things have moved on quite a lot. So it's actually not fair to compare these two products because things have moved on. Regulation has changed. The technology has changed dramatically. So we're now looking at cloud products. So, but we're still going to go through this comparison. We're going to look at dimensionality, as I said, where I think there are differences, but there are a lot of similarities too. So, just going to move to the next slide here. Yes.
Which version of FCCS are you going to use? Which patch?
So this one here is the legacy, right? Is the legacy which is now part of your enterprise. Yeah. Is the enterprise license.
1903, 1906?
I'm not actually it's the latest one. Yeah, so I've tried to include, you know, a like-for-like comparison with HFM. So I'm actually talking about, you know, the latest version. And so what I've got here, actually the coloring there doesn't really work, but what I've tried to do here with this high-level comparison is to, you know, group, you know, these areas by what's included in the product, right? It's part of the license. What's actually come as an additional software. And also what we have here is the main differences between the two products in terms of the approach taken or required and the tool used to you know, achieve certain things. What stands out is the main differences here between the two products is HFM, highly customizable product, versus FCCS, where certain level of customization is available, but you have an extensive content, standard content, out-of-the-box content. Yeah. So what we don't actually, we never had in HFM is really an out-of-the-box, right? Because it's always been difficult to apply out-of-the-box content to, you know, certain sectors, certain companies, you know, especially chart of accounts are always different. Yeah. But what Oracle have done here, they've really pushed, you know, a chart of account, so income statement, balance sheet into the product. And then they built out-of-the-box rules, you know, to do a lot of stuff. We're going to be going through some of the details of the rules as well. But this is really high level. Pre-built functionality, out-of-the-box content in FCCS. What Oracle have done is also they embedded best practices into the solution, especially in the dimensionality, where we have things like data source dimension already included, or movements dimension. These two dimensions, I know you can probably disagree with me, but they are in pretty much most of the HFM implementation. Yeah, so they are definitely best practices already included in the product. As I said, we already touched on customization versus configuration. Yeah, FCC allows you, you know, a certain level of customization, but you need to be a bit careful what you add in there, how you write the rules, and so on. So a lot of testing is required in there. In terms of application, metadata, how you administer the application, the metadata, and the rules have changed. This is quite a big change in here. When we look at application, so how many applications you can have, right? HFM, as many as you wanted in one environment. FCCS, it's only one per environment. So you cannot have an extra one. If you want an extra one, you have two standard, which is pre-prod and prod. And then you have to, if you are on a standard license, you have to purchase another environment. But if you are on an enterprise, you can have as many as you want, as Andrea was referring this morning. So, you know, a major difference here. Metadata, it's HFM. We all use the Windows client for many years. Some people love it, some people don't love it. You know, I used it a lot, but we all also use Excel macro, heavily customized Excel macro to produce the metadata. With FCC, you have a web editor. You actually have two web editors. The old planning editor for dimensionality. That's okay. And you also have the simplified editor, you know, which resembles very much Excel. And then what is a big change in here is that you have the administration available in SmartView. So you can upload chart of accounts, entities, customs, everything from Excel. So if you have to do, especially a bulk upload, you can do a lot of copy and paste. You know, if the accounts are similar, you know, and you are even a user, you don't know exactly what all the attributes mean. You know, you can copy and paste from some other accounts and just add it, right? So it's a lot more intuitive using Excel rather than Dimensionality. The dimension editor is also quite fiddly, so you have to do quite a lot of work. In terms of navigation, so FCC is got a modern look and feel. We've seen earlier this morning a snapshot, a screenshot of the new navigation, the homepage. But it's very much like cards and navigation flows. It's quite intuitive. I mean, I come from an implementation, an end-to-end implementation, where we created a lot of forms in FCCS, a lot of cards, and the user picked it up quite quickly. There wasn't much need of training for that. There's training needed for other things, but the navigation is pretty easy. So I must say, Oracle have done quite a good job on that. In terms of platform, obviously, FCC is on cloud. So you have updates coming in every month, patches, bug fixing. With HFM, we all know what we have to go through for updating the infrastructures and doing patching and so on, and also waiting for Oracle to release the patches and to release the versions. In terms of Similarity, we have all the reporting suite. So that's, it's the same as the on-premise. So we use SmartView. So there is integration with Office. We have the financial reporting studio, which is on the web. What we have, which is new, is the bottom part here, which is all the dashboarding and Infolets. So there is a very heavy emphasis on dashboarding. Yes, question?
Have you got a view of the front screen of FCCS, the main screen?
I don't have it here, but if you remember this morning, Andrea was visualizing a blue screen with a lot of colorful cards. That's basically your front end. And you can use that front end to navigate from FCCS to any of the other modules. So you can have a workspace where you actually navigate from one.
Is that front screen similar to HFM in any way?
No, it's completely different. Yeah, so this is actually, from my point of view, is a pro compared to HFM. You have a very, very intuitive, as I said before, very easy to use navigation.
Is it similar to HFM?
Just to let you know, Guy's got FCCS.
Yeah, I can fire up something, later on if you want. We can just go through it together. In terms of similarities, again, but software isn't the software required here is additional on the on-premise is all the close manager. So the task orchestration. So everything around your close, all the tasks required to complete the close from start to end, can be organized and managed through a software. This software on-premises was an additional license, whereas for FCC, it's part of the license. And Andrea was mentioned this morning is now part of all the modules. So if you want it for planning, you can use it for planning, or for tax reporting and so on. Included in there is also supplemental data load, all the supplemental data information required to do additional disclosures. It's also part of the module. And we also have data integration, which is, for people people familiar with on-premise is the FDME or FTQM, and we have data management in. I'll get there in a second. Data management, which is included in the license again. There was a question?
I was just going to say, with the move to 11.2, well, a lot of these differences go away in terms of HFM versus FCC, because they're moving away from the standalone applications to your enterprise. Basically, you get the whole suite either.
Yeah, they're modules now. Yeah.
They're modules now, but that'll go away in the near future, won't it? As soon as you move to 11.2. These differences will be redundant because everything will be bundled together.
Yeah. Everything is bundled, yeah. Okay, dashboards and Infolets is it's an additional, it's an addition to the FCC product. As I said, there is a lot of emphasis on the creation of dashboard and Infolets.
Yep. Another piece for your cloud platform. HFM was the first cloud product Oracle ever had.
It was the first cloud product.
Been hosted and accessed through the internet forever.
Yeah, that's true.
So
It is.
Your
it is.
definition of cloud different to other people's definition.
It is. It is a different
If it's
definition.
hosted,
Yeah.
Oracle
Yep.
will see it as a cloud solution. That's what OMCS is, OCI now.
That's right.
So,
Thank you, Noam. Let's move to the next. I'm just going to have to speed it up a little bit because we don't have a lot of time. But as I said earlier, dimensions. We have a lot of differences here. But actually, if you do look closely to the dimensionality, you see a lot of similarities with HFM. So people who worked in HFM, you're going to see a lot of this dimension were there before in HFM. Scenario year period, same, really, no change there. When we look at view, same members, right? So we have periodic, we have year to date, we have quarter to date, half year. But the way the system works is very different because in FCC, out of the box, the data needs to be loaded periodically. Journals also need to be posted periodically, right? Which is a big change for companies because the majority load data year to date. Obviously, there are options around it. You can decide to load the data on an accumulated base, but then you have to do extra work to make the calculation work, to derive your periodic with performance implications. So there is a change in not just the technical part, there's also a change in the process for companies. Yeah. But there are also enhancements in place to allow customer to load the data year to date and derive the calculation out of the box. So it will come. Don't ask me when, because I don't know yet. But there will be also enhancement on that side. In terms of entity, really no change. You can create your primary entity structure and then have alternative structures in place if you want to do statutory, management reporting, divisional reporting. So you can create shared hierarchies in the dimension. I'll just touch on intercompany because it works together with entity. So intercompany, same as in HFM, members are created automatically when you add an entity and you flag it for intercompany. So there's no really change there. So you have an equivalent ICP partner, and it's going to work with the account dimension where you need to define accounts, flag it for intercompany, create also a plug account. Okay, but everything is out of the box. You just need to configure it, and then the calculation will eliminate the intercompany or the investment and so on. The account, this is where the majority of the differences are, and it's to do with the out-of-the-box content. So the accounts in HFM, completely blank. Yeah, you don't have anything in there except for exchange rates. With FCCS, you have an income statement, you have a balance sheet, you have a lot of system accounts, and you have some KPIs, and the members are preceded. This is what Andrea was referring to this morning. So you have accounts preceded with FCCS. Now, with the name change, I don't know what's going to happen. Are they going to change the preceded content? I'm not sure. I don't think it will. But yeah, so accounts, you have a lot of out of the box, but you can add the chart of accounts from the customer. So the customer, if they want, they can add their chart of accounts with their coding, and it's integrated within the out of the box. And you can create alternative hierarchies for reporting of P&L and balance sheet. You're probably wondering where is the cash flow, right? So the cash flow actually doesn't sit in the accounts as, I've seen it many times and I've built it within the accounts dimension in HFM, but it actually sits in the movement dimension, which is over here. So movement dimension is part of the 11 system dimension of FCC, and it used to be a very common dimension in HFM. Cash flow, so actually the movement dimension includes all the movements for your balance sheet and also for P&L, but it also includes an alternative hierarchy of the movements, which is built in built to report the indirect cash flow. So you have your operational movements of your balance sheet, you have your investing movements, and you have your funding movements of your balance sheet accounts. So this is where the cash flow. So you're actually not looking at any of the accounts. We're looking at one account, which is the total balance sheet, and then you're looking at your balance sheet movements to see your cash flow from operating to funding, and so on. Okay. Yes.
When you set up the account, do you actually have to specify in the metadata of the account where it fixes the cash flow?
No. No, so the dimensionality in FCC, which is the same dimensionality that you use in planning, right, in EPM planning and now PBCS. So when you create an account, you have all the dimension members available for that account, right? So you can actually match accounts and movements that don't have anything to do with it. So what you then use is you have this combination, so you have an open combination, then you create valid intersection to make sure that data only goes into the right place, right? So you'll have a valid intersection working on a form, which display a white cell if you're able to input it, or it's a gray cell now. Yeah. So you have the combination of these two that you have to use to make sure that the data is reported in the right place.
But there's a lot more work up front in order to get the cash flow to work.
No, actually, so the cash flow, there's no rules, right, as I said before, and I've got this in the pros and cons, but you don't have any rules in there. You have to do work on the metadata. So you have to define the metadata to the level required for the cash flow reporting. Yeah. And then the big effort is actually the enrichment of this movement. Yeah, the data enrichment. So because if you don't have the granularity in the GL, which most of the time you don't have, then everything goes into one movement. Yeah, just the movement from your starting position to your closing, and then you have to reallocate that. I mean, but even in HFM, this is normal practice anyway. Yeah, but what drives the cash flow is really these details. So you have to be careful in detailing exactly what's required. Just to move on. Yep.
One quick one. What about if you've got any custom FX implications around cash flow? How does it deal with?
So it's all done out of the box within the dimensionality and the rules. So there are levels, there are members within the movements to look after to take care of the FX. Yeah. So you have a balance sheet movement dimension that has got an FX line in each of the accounts. So then you have the CTA recalculated, and you have the effects on cash flow also calculated. Yeah.
Yeah. So all you need to do is check that you're out of the box and Oracle's out of the box at the same thing. And then adjust it with a rule or something.
Well, the testing is always required. Yeah. Anyway, just to finish with this one, the value dimension is gone, finally. I always find the value dimension, every time the customer have asked me to explain the value dimension, I always had to go and read the manual to understand. Yeah, but what you have now is you have these two dimensions, which is consolidation, which resemble your value, the top part of the value dimension, but is a hierarchical layout, which is more intuitive. You know exactly where things go and end up. And then you have currency, which is just your input currency and your reporting currency. So you can have more than one reporting currency in the system. So you have all your local input and then reporting currency. And every time you want to translate to a secondary reporting currency, you have to run a rule to translate that.
Question.
Yes?
In HFM, obviously, you have a capability to post the journals adjustments, because sometimes you might have timing differences, which doesn't end up in the ERP system.
Yeah.
Does the same capability exist in FCCS?
To post the
Journal adjustment, because it might be last-minute allocations.
Yeah. So there is a journal module within.
Yeah, but they now go into this main currency, which would be either euro or entity currency or something. You don't have any more this.
You do it to parent currency, if what I think she's asking.
So in the consolidation, you have an entry which is called entity input, which is in local currency. That's the only one available right now.
You can't put parent currency adjustments in. And
Not now, but it will come. It will come. So there will be 2 extra members in there, which is one which is parent currency, and then you have a contribution level input as well. Right. What I'm not so sure, and I need to confirm with the Oracle guys, is that you can actually enter a journal in there. I know you can do an input, but I'm not 100% sure if it's an input by a form or if it's by a journal. So we just need to confirm.
And that is an important commodity point.
Absolutely, yeah. I don't have the answer to that, but I know they're working on making different levels available. The question is it available through the journal?
Yeah, one quick question. The intercompany dimension member or members, wouldn't that automatically be created
They
by
are
flagging an entity?
Yes, they are. Yeah, I explained earlier. As soon as you flag the entity dimension, it creates a copy, an equivalent copy in the intercompany. Yes. Custom dimensions. This is where the biggest difference again is compared to FCC. So we've got unlimited custom dimension compared to FCC, where we have 3 or 4. The reason why I say 3 or 4 is it's 3 if you enable the multigap, which, when you create the application, you are asked the question if you want to enable the multigap. If you don't want to enable it, you just want to use 4 custom dimension, then you have the option to do that. And by having data source and movement and multigap in there, you have basically 3 extra dimensions to use for reporting. Yeah, so you could be using for business unit reporting or payroll reporting if you need to go into the details. These are just some examples. And again, like we've done in HFM, when we only had 4 dimensions, you could be looking at, if you actually need a lot of analysis, you could combine into the existing. So you could have an additional analysis included within balance sheet movement. So as long as you don't, you don't create conflicts between the accounts and the custom dimension, then you're okay with it. Just to move on, I've already gone through this, but this is just a summary of what we just discussed. So in case you want to look at it later, I'm going to be sharing this presentation as well. But this is exactly what I went through. One thing to mention here is that for the data source, again, used to be a best practice. So we have preceded members, but you can also add extra members if you wanted. So if you need to bring in information from the GL, from a secondary ledger, for example, for certain purposes, you can actually have a data load rule which extracts the data from, if you have direct integration from a secondary ledger, load it into the system and point it to one of these members. An example could be IFRS 17, as an example, where you have journals in the GL and you want to bring it in. Yeah. By default, data management maps it to one member, but you can change. If you want to create one, it's just called differently, you can create it. So you want to have a SAP GL, and then if you have multiple, you can have multiple here. If you have multiple GL. Oops. Sorry. Just moving to rules. As I mentioned before, this is where the majority of the difference are between the 2 products, in my opinion. Not only on the rules that you can configure or write, but it's also with the tool used to write the rules. So we're all most of us used to use VB scripting. We became master with VB scripting. I'm not, by the way. But now everything is done through Calc Manager, which some of you are probably familiar with, but it's using the S-base scripting. Okay, so it's a different technology. Yes, it requires a bit of learning curve, but it's not that difficult. Yeah, what you need to be careful is really how you write rule for efficiency, for performances reasons, but it's definitely something, from my opinion, that it can be taken on for sure. In terms of the rules, these are just the main rules that you could be having in an HFM application. I haven't actually added here validation. I just thought about validation earlier, but we can talk about it. But if you think about profit for the year into your equity, custom and pre-built in FCC, and it's not a rule. It's just metadata, and it's already there. What it is basically your P&L. The full P&L structure rolls into your retained earnings account in the balance sheet. Yeah, it's a bit strange, but it works. Opening balance is a pre-built rule, right? If you need to override the opening balances, there are insertion area within the rule Calc Manager to change this, right? And actually, what you do have now is you can override the opening balance. So if you need to, for example, forecast, you need to pull the data from your actual, you can change that. And in budget as well. So if you need to pull from forecast first and then from actual, you can override that. And it's just a simple setup in the system.
What about restatements if you need to restate your opening position and you want to see your original?
I mean from experience, right? Separate scenario. So you copy the data into a separate scenario.
Yeah, but then you're overriding. But if you want to see clearly what you had previously and what you're adjusting to.
There's a custom dimension.
So if you want to sit within the same scenario, are you referring? You want to sit in the same scenario, or you just?
If for instance, you'd move it to another scenario, like a restate scenario, then you'd use a custom dimension to track the before and after. So you'd eliminate. So you'd use a custom dimension to eliminate between the before and after. So you could use a parent that would then identify what was your before position and what was your after position.
Yeah. When you say custom dimension, you mean the
one of the custom dimensions that we're limited to now.
Yeah, the data
one of those.
Yeah, absolutely. So the data source always give you the details of the movement from one to another. Obviously, the journal will give you that audit trail too. But if you really want to compare, okay, this is what I had before, this is what I have now. I don't know. I can't think of any solution other than having a separate scenario. To be fair. Cash flow. We already talked about it. Complex custom rule in HFM and also complex to reconcile. The data reconciliation of cash flow has always been a challenging task. This doesn't go away. You still need to reconcile. You still have work to do after the data has been enriched in the balance sheet movement. But at least there's no rule to be built, and it's also easier for an accountant to actually see where the data comes from, because it's your balance sheet movements or your P&L movement, right? So you track exactly where the cash flow variance is coming from. KPI ratios, although it's pre-built, it's quite limited, right? And I'm hoping that there'll be more KPIs coming in later on, but at the moment is a bit limited from my point of view. Out of balance calculation. So there is a rule which is not actually is not flagged when you create an application. Is not enabled by default, so you need to enable it. The reason behind this is because you could have a bit of impact on performances. I personally enabled for a customer. They really love it somehow, but. I mean, I didn't see any performance degradation in having it. But again, you need to test it. It really depends on the size of the database and the number of entities and so on. Then what we have is out-of-the-box CTA calculation, as I mentioned earlier. So FX for every single balance sheet movement is every single balance sheet account is calculated. We've got translation at historical rates is also pre-built in FCC. And we also have a translation like a standard translation, standard consolidation, and elimination, again out of the box. So you don't need to write anything for all of this. We all know, the work that is required in HFM. A lot of us use, templates from one implementation to another one, but there's still a lot of work to be done. Advanced consolidation. Actually, sorry, just to come back to this one, there is in HFM some pre-built functionality for consolidation. So if you have just 100% consolidation, you don't need to do any elimination. It's there for you. Same as translation. But if you need to build some advanced one, then it's customization. In terms of advanced consolidation, FCC, if you enable the manage ownership, you have access to rules in the library to create advanced consolidation. So you can have elimination of equity, you can have proportional consolidation, and now you also have equity pickup. So you have templates in there. They are not enabled by default, so you can decide to enable it. You can test it, and if you see that these templates don't work for your specific requirement, you can copy and paste and create your own template. So you have this ability to utilize. In terms of allocation, any other calculation like validation, you have to build it. There isn't anything in FCC to do that. Even validation, I'm just going to finish and I'll come to you. Even validation, what you do use in FCCS, in FCC, you can create your own accounts, you can create your own validation rules, or you can use validations within a form. So the planning validation rules. Okay, so I had a client, they've built all the validation in the forms because it's pretty straightforward. I mean, if they have to build it themselves in the rule files, in both systems, it's quite complex. It would be a very difficult task and challenging for them.
What about joint ventures, associates, acquisitions, disposals?
Joint ventures and associate, you have pre-built templates you can use. And for acquisition disposal, I don't remember if there is one. Perhaps the Oracle guys can confirm it, but yeah, I'm not 100% sure. I can come back to you on that.
And what about the investment companies?
So investment, there are templates in there.
For investment companies consolidation?
Yes.
Do you have investment into investment in the next?
Yeah, there are cross-investment rules as well. So there is a manage ownership module within FCC. You have templates also for investments and elimination of investments and so on. Does that answer the question? Not so sure. In terms of, just to summarize the pros and cons, in FCC, so you have a quick deployment by utilizing the out-of-the-box content and the pre-built functionality. Cons, you got a limited number of members in Dimension compared to HFM. Yeah, so in terms of cash flow, we have everything is metadata driven, no rules, but at the same time, it requires quite a lot of effort for finance people to detail out the movements. Okay. In terms of the ability to configure, so there is a flexible framework within FCCS, so you have the ability to flag certain functionality. And Andrea was referring to this morning, saying if there is new functionality coming in, you have the ability to flag it if you need it. So it comes not enabled by default, so you can analyze what the functionality is, what it does, and then decide to enable it or not. On the con side is that obviously we have configurable calculation available, for a few months now. But, as I mentioned before, adding configurable calculation can have impacts on performances. Now, performances are still not on par with HFM. We all know that. But I must say, in the last updates, we've seen quite a lot of improvements, gains in the in the performances. And it's one of the top priority for Arco to make sure that we're getting closer and closer to HFM performances. In terms of also settings to the cubes, so I don't know if you are familiar with planning, but planning is based on cubes. Whereas for PBCS, for example, you can create cubes. For FCC, everything is locked. So you cannot even change the settings or the order of the dimensions. Everything is completely locked.
Not even dense as sparse?
No. So you only have 2 dense, which is a count and period. You cannot do anything on that.
So technically it's not a cube, it's a matrix.
No, everything is controlled by Oracle in terms of what can be changed and not, and it's due to performances, to make sure that problems don't arise.
Actually, Oracle,
yes.
Oracle run analytics on their environments constantly, and if they see one environment or application putting it down, they will turn it off, go to the customer, check the design, and that sort of stuff.
That's right. Thanks, Noam. Just to go through some of the others, how are we doing with time? Running a bit late? Yeah. Okay, let me just go through this. Data integration, as I mentioned before, it's part of the license. So you get a limited version of FDME within the product. When I say limited, it's because the scripting functionality is limited, right? So you cannot create, all those very fancy scripting that we used to create in FDME. But what I would say also in terms of the cons is that, and I mentioned this before, the data out of the box has to be loaded periodically, through data management. So you have to make sure that, your data, especially for balance sheet, gets mapped to the correct combination of accounts and balance sheet movements. Also, I would say, I just mentioned this already before, the functionality is limited. And in terms of other pros, cloud platform, what that means is that all the patching, all the updates is done on a monthly basis. So I don't know if you're aware, but you have first Friday of the month is the update of the pre-production or test. And then on the third Friday of the month, you have update of your production. And that happens every month, right? So what that means is that you have 2 weeks to do your regression test, okay? To make sure that, your application, your data doesn't change or something changed in your application after the regression test. After the update. Obviously, when you do it on test, you have problems. You can live with it, but in production, that can create big problems. So, what you have to make sure is that you have a plan in place, a process in place, to make sure that your application is fully tested after the update comes in. The other thing also that Mark has mentioned earlier is your snapshot. So your backup is done on a nightly basis, right? But it gets overwritten every day, which means if you don't download it, you're going to lose it. And if you need to go back 2 days earlier or a month earlier, hopefully not. But you don't have it, so you need to make sure. And you can utilize Groovy, you can utilize EPM Automate to have script running on a nightly basis to download, rename, just have a versioning process in place as well, so you have a full access. I need to actually, is there any question? I think I've covered pretty much everything. The other things I wanted to cover are reporting, journals, but there isn't a lot of differences in there. The functionality is there.
What about security in FCCS?
Security? So security obviously has changed compared to, so we're not using obviously shared service. Well, we're using the access control, which is where the security is done. The security can be applied to dimensionality. So you can secure it down to one account, one custom member, one entity, and so on. And then you have out-of-the-box grouping, which gives you access to what you can do in the system.
But can there only be one administrator to security, or can there be a number of,
You can have one person, you can have a group of people. It's up to you. But you can. And you can actually give extra access to certain people as a power user to do extra tasks.
can there be a user that has exactly the same admin rights as the administrator?
Yes. Yeah, this is up to the administrator to define the access control.
Right, did you say that the movements that are valid on each account can't be locked down? Did you say you lock it down in the form?
You lock it, the combination, you lock it through this card called valid intersection, which is, if you think about, have you had experience with no input rule?
Yes.
This is the opposite. You actually tell the system where you can input.
Okay, but you are locking it down 100% like you can in HFM. Obviously in HFM you can lock down combinations exactly. So you can do the same thing in FCCS, just a slightly different way.
That's right.
Yeah. Okay.
Okay.
I have a question from one of the group members. He's asking, given actually we've been hearing a lot that actually FCCS is not HFM, but rather S-base, which is technically true.
It's based on the cloud?
Yeah. And he's asking, how would you do the IC elimination in S-base?
The IC elimination?
Yeah.
It's out of the box.
Okay.
It's done. There's nothing to be done there.
You don't need to know that.
Yeah, just check your data.
Okay.
One more question.
Yes.
So based on something I'm currently seeing, I have a client which has implemented Vista data warehouse. It's pulling data from the ERP system, which has a very detailed level of information. And then they're going to use that to obviously do all the reporting from. They currently have a HFM, and they will be pulling all the consolidation eliminations into that data warehouse to have that consolidated view. Is there a way to pull that information from FCCS?
Yes, you use data management.
Yeah.
You create a data management rule, a data load rule, and you target, well, you actually, you extract the data from the combination of, members where the journal actually sits. So it could be a data source member, a combination of an entity, an account, an ICP. It would be a data source and a consolidation. So you have, in data source, you have an elimination member. In the consolidation dimension, you also have a member there. So the audit will be in this combination. So what you can do with data, the data load rule in data management is pull information from the combination you need, and then you can either save it to a flat file. I don't believe there's any integration directly to, how did you say is this, what's the name of the?
They call it Vista.
Vista.
Data warehouse, but it's a BI.
So somehow you have to, you have to export it into a flat file, which then you need to.
Go through mapping tables and then.
That's right, yeah.
So in case if you have FDME like on-prem, then it's straightforward, because in on-prem like in ATN you can easily define source and target. So source will be your AFCC, and then target will be your data warehouse, and then all the mappings you can easily state away, bring the data.
Good point, Sunil. That's it, exactly. Yeah, so I think maybe last one?
Last one? Okay.
Yeah, I have another question actually. Okay.
One generic one more than just specific.
Yeah.
So you're going to have the UAT is going to, or whatever testing environment is going to be patched week 1.
Yeah.
Prod is patched in week 3. Okay. Everybody in this room, in terms of best practices, the systems accountant is going to go, data is owned by the business. We don't own the data. You have to sign it off. You've got a month end happening from the finance team, week 1 and into week 2.
Yeah. If it's a normal month end.
For all of the practicality, you cannot get the finance department within 3 days to check all their data sets. I've got 22 scenarios. You think I'm going to get my finance team to check 22 scenarios of data every month?
No way. No, there's no way that can happen. But
so what are they doing? I mean, somebody must be doing.
There is an automated regression testing that can be applied to the to your pod. So if customer needs to go through this this activity, best is really to talk to Oracle because they can help with that. And what they do is they create a script that goes through the test automatically. So you can do it post the update on the first Friday. This can run, and it can give you a report back saying, okay, this is passed, this has failed, and so on. So you can try to automate as much as you can. Not everything can be automated because there are visual checks. A lot of these checks are done in SmartView. So if you have a file built where you check your data, you can do it. You can have something in place. Not, as I said, not everything can be automated. I'm actually going through this process right now with the customer, and I'm working with Oracle to try to see how many of these tests we can do together. So perhaps in a month time I can give you more information on that.
Also,
yes.
Skip, you tell Oracle which days you want it to run on, and you can miss 2 cycles. So if you don't want to happen this month, you can
That's
say
right.
pull
So
it, but you can't miss more than 2 cycles at a time. So you could
That's
actually do
right.
it quarterly if you really wanted to.
Yeah. But what you need to do is you need to raise an SR. So if you find issues, then you need to ask Oracle to postpone your prod update. As now we're saying, you cannot postpone, more than once or twice.
Yeah, you've got to get, exactly. We don't
Okay.
own the data.
Everything's pre-built, so they need consultants for something else. There you go.
Okay, guys.
Okay.
Thank you for.
Thanks very much.
Thanks,
I
Luca.
hope it was useful.
Big one for Luca, please. Thanks, Luca. Cheers, mate. That was,